Hello everybody, I'm John. This is Strategic Investing, and today we're going to talk about Xtract One Technologies earnings. And I do apologize to everybody for the delay in this video. Been taking care of a couple sick kids over the last few days, and it's been a rough weekend, but I'm here to get this video out. If you hear any snoring in the background, that is the sleeping baby that I'm holding while I am recording this video. So again, just trying to get this video out for you guys. Apologize again for the delay, and let's just jump right into it here. So the first thing that I want to talk about, these earnings came in roughly in, I think, overall, basically met expectations. The only negative I would say here is that we did see revenue decline, specifically platform revenue. Did decline, which, we would obviously like to see it grow every quarter moving forward. The one thing I will say about that is that even though platform revenue did decline, we did see some very nice growth in the backlog. The backlog grew about 30%, close to 30%. We had about a $9 million number last quarter, and this quarter it is at 12 million, or just over 12 million. So pretty nice growth quarter over quarter on the backlog. That's well over 150 or so percent annualized. And one thing we have to remember here is with Xtract's numbers right now, with their stage of growth that they're in as a company, we're going to still see some choppiness, especially in that revenue number, because they have a mix of upfront and subscription contracts. And if they get the majority subscription contracts in a quarter, like it seems they got here, as far as the number of contracts or the contract value that was booked in the quarter, then we're going to see a lower number on the revenue, and we're going to see that number more so in backlog, because that revenue is going to come in over time rather than upfront with the quarter. And so even though we do obviously have a decline in revenue here that we wouldn't like to see, we got to remember, especially at this stage in growth for the company, they're getting, single digit contracts maybe per quarter at this point. That means that, a few contracts one way, subscription or upfront, could greatly skew whether or not they're going to have a big revenue number or a small revenue number in that quarter. And so, we kind of need to be focusing on, as I mentioned this in my Discord server before the earnings came out, kind of a combination of the revenue that they get in the quarter as well as what they added to backlog. Or in other words, we should be more focused on the total bookings for the quarter rather than just, what revenue is per se, until we get, maybe a year or two down the road when they're getting much more contracts and we can kind of expect a consistent revenue number. And speaking of expecting a consistent revenue number, one of the positives that I would like to talk about is Karen mentioned that I think about 55% of revenue in the quarter came from upfront contracts. That percentage was down from, I believe, a year ago, and down from the previous quarter. And what that means is 45% of this revenue that we got is recurring revenue, guys. So that means that we're looking, I think by my math, at about $1.3 million in recurring quarterly revenue at this point, guys. So that is definitely a number that has been growing the past several quarters. And that is really, really what is going to drive not only the growth for this company, but the growth for the stock, because that recurring revenue, that consistent, expectable recurring revenue, that is what investors love to see, especially institutional investors. That's one of the huge benefits of a SaaS company, is the predictable recurring revenue. And so as we grow more and more of that recurring revenue, not only are we going to see consistent numbers, we're going to see growth in the company, but we're very likely going to see much more interest from investors, just because of how nice that is to have, how easy it makes it to predict future growth and everything like that. So that is definitely a positive that we got in the quarter. A couple more positives that I want to talk about. DHS, obviously, everybody's interested in that. It seems like Peter is saying that is right around the corner. He said the award or the certification, however he put it, is pending. And so I think we should be expecting that fairly soon. Obviously, as we know, we've been Kind of disappointed before. It's definitely taken longer than we've thought, longer than Peter and Karen and Xtract One have expected. But the way he's talking about it, it seems like it's happening very soon. And on top of that, it seems like, from what Peter said, they have approval specifically for the NHL. So that is something, I think a lot of us were kind of expecting the DHS, the NHL to be kind of wrapped up within the DHS and maybe the NBA and other leagues like that. But it looks like they have received approval for the NHL. That means some of the contracts that they've gotten, specifically SAP Center maybe, they will now be able to use those smart gateways that they got for NHL games. So that should be pretty exciting. That will probably, allow a few more contracts that have been pending to trickle in. And so that is very nice, both the NHL approval and a DHS coming very soon. And another thing that I do want to touch on with the DHS is in my interview, and in case any of you guys didn't see the interview that I did with Peter a few weeks ago, one of the things that I asked him about was the guidance that they gave in the shelf prospectus that they filed. Now, I asked him whether or not that guidance, whether or not those forecasts kind of included or were contingent on being awarded the DHS approval. And he said no. And so what that means is if we do get DHS approval, say in the next couple of months here, then that guidance that they gave, that $17 million number for revenue, might actually be pretty low, because that number is not including any influx in contracts that they get as a result of receiving the DHS approval. So, we'll have to kind of see what exactly goes on here. But if we get that very soon, that could reevaluate what we're expecting for the next couple of quarters here, as far as revenue, as far as, gross profit and cash burn and things like that. So that is something I will be really wanting to keep an eye on if we do get that approval. And any comments that, Peter, Karen, or give around that when we do get that approval, and in the next, especially in the next earnings right after they get that. The other thing that I want to talk about here is related to cash flow. There was some confusion on, myself. I couldn't quite figure it out at first as far as what the cash burn actually was and how the math worked out. I was kind of talking with some of the people on my Discord server, and what it seems like happened is, even though cash burn technically was only 1.1 million, and Karen actually also made some comments around this on the earnings call, even though cash burn was actually around 1.1 million, the number, their really the cash flow that they actually spent on operations was somewhere around 2.5 million or so, she said. And the reason that there's the discrepancy there between what they actually kind of spent and what the cash flow statement says, that 1.1 million, is because of the deferred revenue. And what we're looking at here is 3.1 million roughly in deferred revenue here that they have going into the next quarter. And so this deferred revenue on the balance sheet would show up as a liability, because deferred revenue is revenue that you've collected for either services or products that you have not yet delivered. So technically, you can't include that in revenue, but it is still cash. And so on the cash flow statement, it shows up as a positive on the cash flow statement. And what we're looking at here, and I think from what some of the comments that Karen made on the earnings call, is she said, I think her words were that they are improving the timing of the cash flow related to their contracts, or something like that. I'm paraphrasing a little bit there. But what I think she's getting at there is maybe they're kind of pulling forward some of the revenue that they might normally not receive until after everything's delivered. Maybe they're taking some deposits, or maybe getting paid for a large chunk of the contract before they finalize the actual delivery, things like that. So that is kind of what's happening as far as the cash flow statement, as far as the cash burn goes. Really, they spent about 2.5 million. That means, with a cash remaining of 4.2 million, let's say, they have, maybe, what's that, about a quarter and a half of cash left. Now, again, this deferred revenue could possibly be, it could very well be upfront contract revenue, right? And, if we see that, add to that the 1.25 million that we're at now in quarterly recurring revenue, that's about what, 4.4, almost 4.5 million dollars there in revenue, and that's just going into the quarter, what we have already. And, again, that is if this is all recognized in the next quarter and if that is all upfront revenue. But it's very possible, add to that maybe another million or so in revenue that they get in the remainder of the quarter. And, we could very well be looking at an even lower cash burn next quarter. Maybe they actually only spend 1.1 million regardless of what they do with their cash and all of the deferred revenue and whatnot. So, we'll just have to see. But again, I think as far as their cash position, I've talked about this before multiple times. I don't think we really have to worry about this cash position here, even though, I know that may sound very odd with them only having technically like a quarter and a half of cash left. But you got to remember two things. One, obviously they can raise money if they need to. And maybe you think that's bad. Maybe that, maybe that dilution, is going to cause the share price to drop. And it very well might, sure. It might happen in the short term, but I don't think it's going to have a long-term effect. And on top of that, I don't even know that they would get to that point because of all of the warrants that they have from MSG. And I think MSG, honestly, is really incentivized to exercise those warrants before any sort of cash raise would happen, because the cash raise is only going to cause more dilution for them. And if they're worried about, the extra equity that it would involve, they can just exercise them and then immediately sell the shares. And so really, I don't think from a cash perspective we have anything to worry about here. And if we do have anything to worry about, it's very short term from any stock movement from any dilution that we get in the short term. So anyway, I think that is most of what I wanted to talk about. Just a quick recap here. One negative, obviously the revenue didn't come in as much as we'd like it to, but I think a lot of positives working in our favor. DHS approval seems like it's coming very soon. NHL approval we just got. We're pulling forward that revenue that Karen was talking about with the contracts. We're also growing very nicely the backlog and the quarterly recurring revenue and also the annual recurring revenue. And so long term, I think we're setting ourselves up very nicely here with Xtract One. And I'm really excited for the next few months here, especially with DHS possibly coming. So let me know in the comments below, obviously, as always, your thoughts on the quarter and my analysis, what you think of it, anything you think that I missed. Other than that, again, apologies for the late video, but I hope you guys enjoy, and I'll see you next time.